Hi traders, today's video is how you can use RSI divergence setups for reversal entry strategies. And I'm going to go through the following topics, and they are relative strength index, overbought and oversold, divergence, and we'll go through some chart examples. Now, if you're looking for a new reversal strategy, then this video is for you. Stay with me to the end as I walk you through the RSI divergence setup and how you can apply it to your reversal entry strategy. Introducing myself, my name is Duncan Cooper. I'm a full-time trader and the senior market strategist and trading mentor at ACY Securities. Okay, let's get into the first topic. Alright, first up, let's discuss the relative strength index. So the relative strength index, more commonly known as RSI, was originally developed by J. Wells Wider Jr. in the 1970s. And is displayed as an oscillator consisting of one line that moves between a reading of 0 to 100. And the standard settings are 14 periods to calculate the RSI. And as we look at the oscillator on a chart, a reading of 70 or above is overbought, and a reading of 30 or below is oversold. So let's have a look at a chart example. Alright traders, I've got a screenshot from my MT4 platform, a chart with the RSI indicator on it. So first up, the RSI setting is set to 14 periods. That 14 there is just telling me what the setting is. And then the indicator itself consists of one single line, and there are levels drawn within the indicator, a 70 level and a 30 level. As I've already mentioned, when the indicator gets to 70 or above, it's overbought, and when it gets down to 30 or below, it's oversold. And it's just really telling you when price might be at extremes of being overbought or oversold. So here, indicator comes up to the 70 level or above, price has been moving up, gets overstretched, overbought, and then when the indicator starts to move down, price action reverses. And then oversold, the indicator here comes down to 30 or below, price action has been moving down, and then we see the indicator turning up, and at the same time price is moving back up. Then the indicator comes back down almost to oversold, it's about 29.5, price puts in another low and moves back up. So the indicator is just helping you understand when price action itself is getting to the extremes of being overbought or oversold, and then you might get a price reversal in the opposite direction. Alright, let's now look at divergence. Alright, so let's talk about divergence and what it is. So normally when price is moving down, for example, we're getting lower lows here, or moving down, and what you'll see on the indicator is it's doing the same thing. It's just following price action, making a lower movement down. So this last low here is making a lower low here. So the indicator is just following price action. Okay. But divergence is when price is, for example, making lower lows here, as I'm drawing with this line just to show you that we've got lower lows coming down, but the indicator is actually starting to make higher lows. So that's called divergence because they're in disagreement. Price is moving down, but the indicator is starting to rise and make higher bottoms. That's called divergence. In this case, that's called positive divergence. Another example of divergence is over here. Price is moving up, making higher highs, but the indicator has already topped out and is starting to make lower highs. So they're not agreeing, they're divergent. So it's called divergence. In this case, it's called negative divergence. So at the top of the market, where you have a disagreement between price moving up, but the indicator is moving down, that's called negative divergence. When price is moving down, but the indicator isn't agreeing, it's starting to move up, that's called positive divergence. Now, at these times on the chart, you will often get a very strong reversal back the opposite way, and we can see here that price moves up nicely when we started to see divergence coming in the oversold area, and then when we get into the overbought area on the indicator, price is still moving up, but we're starting to make lower tops on the indicator. Okay, and often when you see that negative divergence, you can get a very strong shift the opposite way. Alright, so when you start to see divergence, be aware that you might get a good strong reversal the opposite way. And when trading divergence using RSI, I like to use the 1 hour chart, and the chart in front of me is a 1 hour chart just for your reference. Okay, let's now go to the MT4 trading platform and have a look at some further examples. Hi traders, just in my MT4 trading platform here, and I'm on the Euro-Dollar daily chart. So first of all, I'm going to show you how to put the RSI on. So come up to the top, click on the navigator button, one left click, come down to the bottom here, there's RSI, double left click. Inputs, I'm just going to use the standard settings of 14, period setting. Colors, I'm just going to use the color here, but you can come in here and change it to whatever color you want. Now I like to make it a little bit thicker, and then come to the levels tab, and 30 and 70 levels, those are the levels that we want, but I'm going to make that a darker color, black, and then click OK. And then RSI is now shown at the bottom. As I mentioned before, there's the 14 number, that's the period setting for the indicator. I'm just going to close this down. And what you can see is we've got the 70 level and the 30 level. And how I like to trade using the RSI is as follows. First of all, on the day chart, I like to look for reversals at key areas of support or resistance. So I'm going to look at this area here where we reversed, and we pretty much came up to this old area of support, and as you can see, historically we can obviously see we failed. So what I want to do is jump into the 1 hour chart in this area. So if price comes up to a key area of resistance, I have the expectation that price might fail. So then I drop to my 1 hour chart to see what I'm seeing using the RSI. So let's drop down to the 1 hour chart now. Alright traders, so I've just dropped down to 1 hour chart and found the area that I was discussing at daily resistance. So obviously here we can see that price actually is moving up and comes up to that daily chart resistance level. At the time it comes up to that level, obviously it's making high tops and bottoms, higher tops through here. But what I can see on the indicator is that we've moved up into the overbought area above 70, and then when we put in the final top, we don't move up to put in a higher high. We actually put in a lower top there. So there we have negative divergence. Now there's a number of different ways that you could trade an entry here. You could be trading a simple break of a swing point. So you've identified that you're at a key area of day chart resistance. You can see negative divergence on the indicator once it achieved overbought status, and you could simply trade a break of a swing point to change the trend. Stop above the high, and then obviously we can see price moves down, and that would have worked out very nicely. You could trade a very simple trend line break, and that pretty much gets you in the same area, but a different way of doing it. Sometimes swing point break or trend line break gives you a different entry point, but there we get a very similar entry. Other ways of trading an entry, let me just clear off my drawings. Now I don't do it this way, but other traders do. Obviously we've said that we've got the negative divergence. I like to trade price action for an entry point, but some traders like to trade the indicator to give them an entry point. So using RSI, you can draw a trend line on the indicator. And what traders like to do is when the RSI indicator breaks the trend line, so obviously we get a break of a trend line just here on the RSI indicator, and then if I come up to see where price is, Price is just here at the moment. So on the close of that candle, that would be your entry point. So there's different ways of trading with the indicator. You can trade price action to get yourself in, or once you start to see a failure in price action, you're seeing overbought, then you see negative divergence, you can trade the break of a trend line using the indicator here. And once that occurs, then obviously you're clicking in to take the trade. And again, what I'll be doing is, if I'm clicking in here, I'll be putting my stop above the high and then seeing how the trade works. Obviously, historically here we can see that it works very well. So 3 ways there of coming up with an entry. Once you've seen 1, that the RSI has become overbought. 2, you then see negative divergence, and then after that you're looking for an entry. Alright, so that's a sell example. Let's now delve into a buy example. Alright traders, so I've got a different chart now, dollar Canadian daily chart, just drawn in this area of support here, and then we can see it price pulls back to support, and obviously gets support, it moves off. So let's drop down to the 1 hour chart in this area and see what we can see. Okay traders, so I'm on the 1 hour chart now. Over here is a daily level of support area, and price comes back down. As it's coming down for the retest, it's making lower lows. But on the indicator, it comes down into the oversold area below 30, and then when it makes its final low, it's making a higher bottom. And we can see the indicator moves up, price action moves up. So as an entry point, you could be looking for trend line break. So your entry would be in here, stop below the low. You could be looking for a swing point break, that would be here. Stop could go below this low or the final low. And as we can see, each one of those entries works out to be a profitable trade. Now if you want to use the RSI indicator entering technique, then let me just clear things off. Again, of course, we see that divergence. Indicators moved into the oversold area. There's your divergence. That's positive divergence. And then on the indicator, we get a little trend line break here. And the indicator breaks above that trend line. So you could use that as a trigger. So then you'd be getting in, just going to reference where that is. You'd be getting in on the close of this candle just here. So you're actually getting in way ahead of the other 2 entry techniques. Stop below the low, and of course we can see that price moves up very nicely from that level. So what I'm doing there is trading at daily support after I've seen the indicator move to an oversold situation below 30. Then we see divergence forming on the indicator, and then it's just a question of picking your entry technique to buy to the upside for the very nice move to the upside, as we can see on the chart there. So that's how you can trade RSI, be it to the upside or the downside, using divergence on the 1 hour chart. Okay traders, I hope you found this video helpful, and look forward to seeing you in the next video. Now if you're interested in improving your trading, why not join me in my free beginner webinar series? You can register by using the link in the description below. All those that attend the webinars get full access to my own MT4 chart layouts and indicators. Okay traders, thanks for watching, and I look forward to seeing you in the next video.